Everyone, and welcome to your weekly market check-in here with me, Greta Wall, your host, and my guest today, the leader of T3 Live's Inner Circle virtual trading floor, David Prince. Thanks as always for joining me for this today, David.
Thank you for having me.
All right, so the title of today's event is a February trading recap. So we're going to start off here with kind of looking backward on your month of February, which has arguably been a monster month for both yourself and Inner Circle. And then we'll get into what you're doing currently. So let's focus backwards a little bit first, and then we'll talk about what's currently happening and what you're looking at ahead. So the month of February, of course, started off with you still focused on SMCI. At the end of January, you saw that big move in SMCI. You started the longs around the 340, and at the beginning of February, you started playing SMCI on the short side. Now you started that out with puts February 2nd. You shorted the stock itself February 5th in after hours. And then we had the big day on February 15th with the puts on SMCI in Inner Circle. These were the puts that, of course, went for some people from $2.65 to $77. Some got it in at $6.60 and sold in the 80s. Huge move for Inner Circle there, of course. That was also alongside some NVIDIA puts, some Q puts, etc. Talk about the environment around tech that you saw in February that was different from January.
Sure. I would say it was a culmination of seeing wonderful fundamentals, right, that came true. Like we had the NVIDIA earnings, you had a backdrop of wow, AI really is something. It's benefiting several companies, and then you had the fluff part. You had the insanity part, which means NVIDIA lifted all boats, and you had an AMD type company that lowered guidance, even though they raised guidance on their AI chip. They lowered guidance, and the stock still ran with everything else, and ARM still ran and has a small float. We were having multi-billion-dollar companies like ARM was having like 30% moves intraday. So to me, it was okay. Now some of the fundamental stocks even are getting a little what I call fluffy, meaning silly. And there's a little bit on both ends, meaning I don't like to get in the way of hot stocks, but things were a little overdone. So I would look to not top tick the market or go short the market. I still remain pretty long, but find intermittent great short opportunities, which add to one's cash flow, P&L, or year if done right. So I just saw a little bit. I don't want to, like everyone else, call it a bubble, right? But I definitely saw way more shorting opportunities come the last couple of weeks than I've seen in a while. And that's the best way to describe it. It's a way to play both sides of the fence where things were getting a little bit overdone, specifically in big cap tech.
Playing both sides of the fence is something that you're really good at in Inner Circle. You can be long a stock one day, short the stock the next day. Even within the same day, you can be long a stock, playing puts on the stock later in the day. How is it for you mentally, kind of shifting your focus from the long side of something to the short side of something so quickly?
Here's how I do it now. It took a while. And I think the best way to say it is if I have a real thesis with something longer term that I think can really work and has 30, 40, 50% upside over the next few months, I'm not going to, even if I think that stock's going down, I'm not going to do a cute short on that sort of stock. It just keeps me safe and less confused. So that's the first thing. If there are stocks that I am long that I foresee to have significant upside over the near term, meaning not just today, but month, 2 months, I just don't short it. It's too much of a pain in the neck. However, if I see something that might have some upside, but is not a focused position that has, at least at that price, that has given me what I deem to be an insane move or a move that is so overdone that I'm just looking for a move from green to red, then I'll gladly go into it. So I try and focus on stocks that, frankly, where the fundamentals don't back up the price, right? And it makes it a little bit easier. But that's subjective. So I also try and keep it real and know I'm not going to be able to figure out that exact price. So the way I look at any of these cute shorts is I try to assume it's going to get worse before it gets better, meaning they'll go even higher than I thought, and not assume my first entry will be my best and I'll probably get two entries. And then also know it's a dangerous game. I'll be wrong sometimes. And when I am, I better take my loss. So that's the way I do it. It's I'm going to guess 10 to 20% of our trading over the past month. So it's certainly not a focus, but they can give you, SMCI, right? I was talking to this kid. He's wonderful. I was talking to Cecil. He's a wonderful guy from the chat who literally started with a smaller six-figure account that's now seven figures. And honestly, he was up a couple 100%, but what got him over the top was that one trade in SMCI. So my thought is I'm not worried about shorting as much as a way to trade, except if the opportunity comes. SMCI going from 300 in a straight line to well above 1,000 at 97 relative strength, second to only GME at 98 relative strength when it topped, seemed like that type of opportunity. But I want to make it clear, I'm not going to go around and just start shorting anything. If they pop up, if we get overdone, I'll be there, right? I think XBI probably, like that's been a focus for me, probably gets tired here. This was my original target months ago. We're at 101.45. I definitely am not going to be buying puts. I'm not going to look to, I'm still long. I'm not going to look to short it because I still think there's upside and that would be cute. So I stay away. That's probably a great example. I think it might go to 98, 99 before it goes to 105. But I don't see a reason to short it. So I would stay away from a trade like that.
All right, we're going to talk about XBI next. Just a quick reminder for everyone who's with us live, whether you're on YouTube or Twitter, if you have any questions, please leave those in the comments in the live chat, and we'll get to them. Say hello, tell David you like his shirt today, whatever you want to talk about. All right, so David, XBI has been a focus for you not just in February, but all throughout 2024. This was on your list of main focuses for the year, this year. Here's a look at the year-to-date chart. You've gotten some flack on Twitter from some people who don't believe in your thesis on XBI, but you have held strong. You have added the stock at low points when you think it is appropriate. You've trimmed and trailed also when you think appropriate. Talk about XBI, what your thesis was heading into the year, and how you're feeling about the stock now.
Sure. Can we talk about something else for a second? I would never, ever in a million years talk to anyone. I don't care if they were managing 50 grand or 500 million. I would never say, you're wrong, you should do it this way. Why is it that Twitter makes some people think they should teach other people? They have no clue. First off, I'm kind of okay at this. I've been doing it for 30 years. And secondly, why does it seem to be the platform where people think it's okay to teach other? It's the dumbest thing. And when they're wrong, they never come back, which is in itself insanity. Okay, now I'll answer your question. What was it?
Talk about your thesis for the year on XBI heading into the year and how that has changed or developed over time with where we're at now at your target of 101.
Sure. So the basic thesis I had was three or fourfold, which was, first off, we had 3 years of severe underperformance. Biotech in general was a disaster, and small cap biotech was like a disaster on steroids, right? So that we had that going for us. Secondly, the whole theme of the market is they're going to cut rates. They're going to cut rates. Anyone that knows biotech knows these are money-losing operations till they develop a drug, i.e., what we see with companies like Lilly, obviously no longer a biotech, but you get the idea. And they need lower rates to really go out and continue to borrow money and get through trials. So they have these fantastic drugs and are eventually bought, etc. So being that this is the year of rate cuts, as many deemed, of 3 years of massive underperformance, and then some other factors like, well, we had abnormal, people forget, because a lot of people in the market haven't been around, they're not old like me, right? And they think rates are always at 2%. Well, they're not, right? That like we went through a decade that was abnormal. It wasn't the norm. And it was even more than a decade. So you have all these companies like Merck and Lilly and Bristol Myers and Pfizer and Amgen and Gilead, et cetera, et cetera, et cetera, that have been, they're not schmucks. It wasn't only Apple that went out and raised money at zero interest, right? Or 1%. You have all these companies that have cash hoards. And you have a lot of companies that weren't prepared for higher rates that don't have cash hoards, but have gotten to phase 2, some phase 3. And it's the perfect environment to go pick out or pick off great assets that have already put 2, 3, 4 years of study, right? This stuff costs money and scientists. So I looked at it, I was like, wow, when I look at simple risk reward, do I care about the Qs going up another 40 points from the 400s for 10%, or the 300s and say 60 for 15%? Or can an index that's, frankly, it was below 70 at the time, be a bit like, I compared this to, and I'm not going to be exact because I'm not looking at the tweet, but when I looked at XBI in the 60s, towards the end of 2023, it was like November or October, I thought, this feels like a Bitcoin moment. Feels like Bitcoin at 16,000. That the upside is that significant. And if I'm to look at, you can hear me, right? Because I hear weird. Okay.
No, you're good.
If I'm to look at risk reward, like something that can go up multiple percent, like just something crazy for an index, like maybe even 100% versus the risk, this is it. It has all the factors I gave you and more. And well, I got lucky and I was right. And here we are. Now, how does it continue? Well, rates, and rates. PCE Thursday and PCE. And then there's another factor. We've actually seen it separate itself from the small caps, which we talked about last week. I said, I see some relative strength. I don't think a lot are noticing in that. I think XBI is ahead. Usually they trade together, TLT, small caps, and biotech. I said, I think biotech's like doing its own thing and getting bullish before. But for it to continue, you probably need, believe it or not, you need IWM above 205, and you need real forward momentum in, we are going to cut rates this summer. It's not going to get pushed back even further to like the fall. There's going to be more than one cut, things like that, which mean PCE that's light or at least not super hot. And that's what could continue this powerful run.
You tweeted out this morning pre-market when XBI was, hitting that $100 mark ahead of the open, and you said XBI $100 with some hearts, trim and trail. How are you managing this trade now that it is at your target of 101?
I've sold a lot of it, being frank with you. I don't even have half a position anymore, and I'll be more of an opportunist, meaning kind of the way I've been trading SMCI long now. On ugly days, if we get a hot PCE and the market wants to pull back and it turns out small caps can't break out the way they're trying to today, I'll be a buyer right into 90. I have to look at the chart, but it's probably into 94, 95 without looking at the chart. So I will think of it more as a great trading vehicle that has some real powerful levers to pull. I'm just looking at the chart over the next coming months. But after what's been a massive move, it's not something I'll buy higher and hope someone else buys it higher. So it'll be more, I'm looking at the chart here. The 8-day is all the way down, I guess, right, 94.84. So yeah, that 94.95 area would be a great buy area if we even got that lucky.
All right, great.
I bought it under 70. Now, there's some people who are momentum players. That's their specialty. Biotech's in vogue. I want to buy now. I learned early on the way for me to make a lot of money is to buy at the right price, so I'm comfortable to not get shaken out. I'm not a guy who's excited to like stop out and buy something back higher. I don't really play that game well, nor believe in it. So my way is to buy at the right price and also know that I probably have to focus on holding more of it till it gets to my target versus buying higher and hoping momentum just continues. So love biotech. Think there are a lot of levers to pull, but think up here, I wouldn't, if you didn't buy biotech, I wouldn't first be entering now. Seems a bit late.
Yeah. All right. When you and I were talking about topics for today, you brought up NVIDIA. You're calling NVIDIA last, I think it was Friday, correct?
Yes.
Yeah. All right. So you very accurately called what would be the bottom and then the bounce. So talk about, how did you see what was coming with NVIDIA on Friday, and how did you execute that trade?
So I talked about this on my podcast because it's like I don't even know where. It's not like I studied this, or just over 25, 30 years, I figured out stocks really have muscle memory, right? It's short term. Like they remember where they were yesterday. And I'm sure some people point to say it's VWAP. It almost doesn't matter what you call it, right? But they're usually levels that you may not see on the chart. It may not be a specific average. It may not be the 10, 8-day, the VWAP, but there's a level that stocks tend to cling to that are comfortable levels. So I call that muscle memory. And usually day 2 and 3 of a monster momentous type move, those levels work. So on Friday, as NVIDIA pulled back from the 820s, it traded 800. And I'm a planner. I'm not great at reacting to events, just not my shtick. So I said, I've seen this before. Don't be shocked. I was telling Inner Circle, if we have a full reversal, just a gut check, because it's been so easy, frankly. I said, NVIDIA probably goes red today at some point. And if it does, it'll take it to get red. It had to go like 784. I said, believe it or not, I don't think it'll last down there too long. So by 784, 783, I'll start along. Reminder, this is not there yet. So I'm like, I just plan. Let me know, because these things happen so fast. Without a plan, you tend to just freeze and don't do it. And then to get to your specific question, we said if we get to 775, I'll get to a full position, because that's where it should hold and provide a great risk reward opportunity for anyone. I don't think you should trade blindly. You have to have a level in mind that something should hold, or else what happens if the stock's down 20, right? You won't be able to hold it. So I don't enter a trade unless there is some level on the chart. So basically, I used the day before's level where it sat late afternoon and finally quieted down. In other words, it was really, crazy all day Thursday after the trade, and then finally quieted, touched like 780s, and then just sat 773 to 775. Just sat there, very comfortable. And then late day, retook 780s again, closed at highs. Then, we know what happened the next day, 800, so on. So in short, I said, listen, the level it found a zone to nap in was 775. And being that it wasn't 774, 773, I'm like, stocks like those big numbers. Okay, that's probably going to be the low. That's where it'll be at a full position. And by the way, it probably goes green again. And I then walked everyone through, why does it go green again? Like, why is it so cute? Oh, it goes negative and then green again. Like, is it a game? But it's not, right? Because the stock is all based on emotion. I'm not saying they're not wonderful earnings. It's trading under 30 times earnings. It's the most dominant thing we have in the market in years. I get all that. But short-term emotions take over. So you had 1 million people who thought it would be down off earnings. It wasn't. They didn't get to buy it. They may have missed the whole run. That's problem. Then you had 1 million people who, by the way, bought it when it was red and did well. They were scared. They didn't buy enough. That's problem. Then you have a whole group of people that, for whatever reason, like to short the hottest stock in the bunch, and they're getting their heads chopped off and life sucks. When it pulls back 4 or 5% intraday, are they finally going to call it quits and cover? Unless they're really a sophisticated short and have some 2-3 year horizon. You bet your hiney, I was about to say the other bad word, they're going to cover, right? Like they're going to cover. So I take those factors, right? And then the simple range. The hottest stock in the market is giving you a 4 to 5% sale intraday. Remember, 4 to 5% on an NVIDIA, right? That's a lot. I told you this tomorrow morning is going to open up 4 or 5%. You're like, wow, it's a big move. So I looked top to bottom, 820s to 775. I was like, oh, you put all those factors together, this could be a rock star short-term trade. Now, when I do those trades, I'm not cute. I didn't say like, and it's going to bounce to 804. It just said it should go green again and provide a great trade, 10, 15 points. Turned out to be like a 30-point trade that bounced all the way to 804, which was insane. I thought the bounce would be more like 790, 795. But the whole trade, the comfort zone, and why we did it was via something I term muscle memory. We just remembered where yesterday's comfort zone is, where it took a good nap, and that matched up with 775.
All right. You have turned bullish on Bitcoin. This was a tweet you sent out over the weekend saying Bitcoin is getting rather tight between 50,600 to 52,800. Seems to be setting up for a bull move any day based on what's been happening so far the past 2 days. You were definitely correct. And then your follow-up, of course, yesterday was Bitcoin now up 5%, coming into some possible resistance near 55,000.
Some call 55. We're at 56. What a shock.
Yeah. But your proxy for Bitcoin that you like the most is Mara, or Mara, however someone wants to say it, but it's Marathon Digital Holdings. And you tweeted this out yesterday saying, when and if she closes above 31 to 32, a new leg of this move begins. I haven't checked it in a couple minutes, but earlier this morning, it was around 32, right? Yeah. Didn't close there, but did hit that 32 range. What is it that you're seeing in the crypto space that has you bullish on Bitcoin? And why is Marathon your favorite proxy for the coin over some others like Riot, for example?
The velocity of the move. I have no idea if it's a better run company or their chips enable them to mine Bitcoin better than Riot and the other miners. Like, I literally have zero clue. So my reasoning is I trade these proxies for years, and I see that Mara tends to have the most outsized moves in bullish and bearish environments, and that's why Mara's up. I don't know, it's up some insane amount on the year this year. So I choose that. It also seems to actually report fine numbers, meaning it's not a fraudulent company. I feel comfortable owning it. So it tends to be the best proxy for me. I also feel I have a handle on how it trades, so I stick with it, and it's been very good to me. And now we wait. You know, I pointed to 32 as a resting spot that might get rejected, and when it gets above that, there's a whole new trade. So far, it turns out to be that big brick wall that it can't break through. By the way, the stock, like, I bought it last week, 22.70 to 23, something like that. So at 32, you know, this is money. That's a 40% move in a straight line. It's only a few days, so it makes sense. It's taking a break. And Riot filed a secondary, so that's why that's down. But, you know, I don't choose Riot because the prices don't make sense. Like, no one, I shouldn't say this because it'll come off wrong. I don't think it's logical that someone would want to own Riot. And the reason is because when Bitcoin was 30,000 not too long ago, like the summer of 23, Riot was 20. Now, I'm not very smart. It's funny, I got into a fight with a guy today who says, you say that a lot. I'm like, it's not to you. I'm really not that smart, and I say it. It's just a thing I say because I know it's true. But anyway, here's my point. Riot is at 1670 right now. Riot was at 20 when Bitcoin was 30. Now, again, I'm not a mathematician, I should say, but Bitcoin is almost doubled. Think about that. It's up like 90%. And Riot is not at the highs from 2023, like that summer. So that doesn't seem like a good proxy for Bitcoin. And thus, I don't trade Riot. Not because I know if it's a good company, but the pricing doesn't really make sense to me. It doesn't seem to be a great proxy. If anything, it seems like something you should use as a hedge and go short. I'm not literally doing that, but that's probably what you should do with Riot.
All right. Yeah. Super interesting. All right. The big story, of course, this week is Nancy Pelosi's purchase of Palo Alto Network calls. And you tweeted this yesterday saying PANW was having a grand old day with Mara, XBI, INMN, ENPH, SMCI, and thought, let's try and short that PANW bounce. And then Pelosi ran you over. She's a legend.
I never thought I'd lose money because of Nancy Pelosi, but yeah.
So just talk about, the broader impact of things like this on the market. The stock is, of course, continuing to rally today, up over 2.5% after yesterday's move. When someone like Nancy Pelosi buys call options on a stock like this, I mean, let's think back to when she bought her Nvidia call options. Obviously, everyone was like, okay, she sees something that someone that, that we need to be paying
What
attention
does she
to.
know that we don't? You gotta listen to Nancy. She's
Yeah.
connected, right? She's a major governmental figure. What could she possibly know? You can't ignore it. All that.
Yeah. Well, and Palo Alto, of course, is very reliant on government contracts and working with the government. So do you think this has the same kind of legs as that her Nvidia call options had at one point?
No, because the fundamental backdrop's not the same. But I do understand why it moved, and I actually wanted to talk about this. So there's short-term traders that want to be smart, right? And then there's traders who just understand the human mind, how people react, either choose to be a part of it or accept that a lot of these stocks trade off emotion, have nothing to do with fundamentals. So I've had to explain to a few people over the past couple of days, they're like, the first thing they're like, didn't she buy it before earnings? Why is everyone reacting now? So she bought it before earnings and was down,
Right.
and then she bought it again. So now everyone's like, well, that doesn't make sense. The stock's reacting. And I say, who the hell cares? We understand why it's reacting. The market's feeling bubbly. We're seeing stocks like Nvidia, these huge trillion-dollar companies go up 50% in a straight line. So of course, people are in the mood to play. It's playtime. And if they see the woman who's attached with Nvidia, where every meme talks about her and Nvidia 200 points ago, and now they read about her and PANW, do you really think they're going to be like, oh, no, let's not buy it because she bought it 20% ago? They don't even remember or care about that. All they're doing is having fun and thinking, oh my God, it's down a lot. Nancy Pelosi bought it. Let's have fun with this. Imagine the short squeeze it can cause. And if it's dumb, who cares? Because it creates buying. An emotional driven sentiment is something we can't gauge. So I always get annoyed because some of my biggest wins are off companies I said. I remember I was buying Nikola before anyone knew what it was at 11. And I literally said, I have a feeling this company could be out of business in 2 years. I literally don't think it's real. But people are going to think it's the next Tesla and buy it. And it went up like, I don't even remember how many hundreds of percent, because that's what happened. Well, don't get me wrong, Palo Alto is a real company. But what happened yesterday and the excitement and the short covering is just people feel good. They have money. Crypto's making new highs. Nvidia is going bananas, new highs on the year. And the human emotion just took over. And that's all this is about, which is why, by the way, when I was shorting it yesterday, and I had done great shorting it the week before on a bounce. And then I heard about Nancy. I didn't go, oh, this is dumb, or what does Nancy know? Or seriously, it's going up a lot. I was like, this woman, I'm not fighting this woman under 300. And I took my loss. And thank God, because that woman had it up above 313. Now, that said, here's a great thing. Am I taking over the conversation, or can I
No, you're great. You're good. Keep going.
You know, we chatted the other day. I said some people take a loss in something and they never go back to it. And I say, well, that's dumb. You remember we were talking about that on SMCI? Well, Kira, as smart as she is and an aggressive trader, she said, today it looks like a good short. And many people on the chat are short at 315, 16, 17. And it's, as we're speaking, 310. I know a bunch of people have puts. So sometimes it's that day two where finally the craziness, let's just say, comes off. By the way, we talk about how to figure out what to short, what not to. It's this type of story I'm more willing to short because it's not backed up by earnings, because in fact they missed earnings. Is it a bad company? No. Is management great? Yes. Is internet security an amazing theme just before someone tells me what a great company and how wrong I am? Oh, that's great. Is it an expensive company that missed numbers, and are there easier stocks to buy out there? Yeah, probably. I think even a bull would agree with me on that.
What is it for you mentally? You mentioned Kira, going back to this stock short after losing yesterday, but as you said, you and I have talked about this before, it's not something you're scared of doing. If you lose on a stock, you don't necessarily just stay away from it because, okay, that didn't go well for me. What is it for you mentally that lets you go back to stocks, try again, try a new method, try a new strategy, and not just, cross something off the list because it might have hurt you in the past.
All right, ready? This is the honest to God truth. It's being ready for the cues or something like the cues to pull back. Like, oh my God, they're at 85 relative strength. I'm talking years and years ago. They're going to pull back and being short 10,000. Then I'm wrong by a dollar and I'm 14,000. Then I'm wrong by two. And like I have 20,000 and I manage decent money, but I'm not some like huge dude. 20,000 cues. It's scary to me. I don't want to hold it overnight. And then it just keeps going, right? And basically, I was so sure it was going to work that I just kept sizing up and losing discipline, right? Like just assuming I was going to be right rather than the market telling me, well, it may not be right on your time. And then let's say I take a loss and maybe hold a few thousand. And then the very next day it goes whoosh, and I realize I'm not God. Like I don't really know when it's going to happen, just like SMCI. I just can be close. So God knows these are great opportunities, but when you try and like force it, that's what I think happens to people, and assume it's got to be on your exact time frame, that's how you get killed. Where if you say I'm close, the opportunity could be big and it's in the next 24, 48 hours or week, that allows you to keep going back because you have an even keel mindset where you don't get too big, get blown out, so you can't go back to it. So after years of, and by the way, plenty of those worked, I don't want to say it, but plenty of them I was dead on. But I was so big, I couldn't hang on to the next day or 2 days later when it finally worked. I realized, stop trying to be right at that exact moment. I mean, you're pretty good if you can come within 48 hours of a big reversal, whether it be long or short. And that I learned is often the best opportunity. So stop trying to force it to be on your time frame because we have no control over the market. Zero. We can gauge things, we can look at odds. And that's what our job is to have a good hypothesis with some logic to it, but it's still guesswork. When you go too big and assume it has to happen on your time frame, you often are screwed. So that's why I keep going back to them now.
Great. All right. So the big data this week that everyone's waiting for is PCE. This comes out Thursday morning ahead of the market open. This is, of course, the Fed's preferred inflation gauge. We already got the CPI for the month of January, and it was hotter than expected. The expectations here for this week are a headline of 0.3 monthly, 2.4% annually, and then the core numbers 0.4% monthly, 2.8% annually. Those are both up a little bit compared to December. So what's your kind of hype? I know you don't like to predict, of course, how the PCE is going to come in, because of course none of us really know. But what are your, if X happens, Y happen, or I'll do Y plans for the PCE Thursday morning, and how are you positioning yourself maybe tomorrow heading into this report?
My theme of the week on Twitter, Inner Circle yesterday was, hey, so much is working. The underperformance in small cap is so insane, especially in light of XBI going. That's where I'm going to add risk. Mara worked huge. Immunon worked huge. SMCI, we were selling some yesterday at 890. We've been buying in the low 800s on Friday. And basically, I was taking all these winners off, and I'm like, what can I still buy? Like, what has good risk reward? And I kept coming back to IWM. So my plan was real simple. Our evidence suggests the economy is holding up. And if you go by the recent evidence, and PCE has a lot of housing in it, could be a hot number. Like there's no evidence that suggests it's going to be soft. But if it's not hot, right? If it's just in line or the small chance it's soft, then IWM explodes. Now, do I want to be chasing it up 4% or 3% on the day? Probably not. So I want to add to my risk yesterday, as I did when it was 200 to say 201s. I bought calls and I bought more calls in stock. So at least I'm positioned in case. Now let's say it's a hot number, as many expect it will be after previous hot numbers and knowing housing is still holding up. Well, we keep seeing the market buy hot numbers. So even if it's going to come in, it's probably going to be a buy the dip because, as I've always said for about 8 weeks, the minute we get further in the calendar, meaning we can get up to this March Fed meeting where they are not going to cut rates, people could then look to the next Fed meeting, and the market's about narrative. And they can say, ooh, now we have a real shot of them cutting rates. What can work in this environment? Okay, it can be less like myopic where it's just big cap tech, nothing else works. And now we can keep pointing to that next Fed meeting and a chill in Fed policy and a rate cut. Are they going to be 5? No. Is it going to be back to back? Maybe not, but a realistic example. So I just think we're far enough into the calendar. You can start looking at IWM. PCE can ignite it further. Everyone sees the same spot. You got to get through that 205 close there. But if we do, and rate cuts come, or we have soft economic numbers, you know, there's an easy, I shouldn't say easy, but there could be a 10% move in the index in a matter of weeks or days. So that was kind of my focus in light of, you know, not being a smart ass, because I'm not the only one doing well, but in light of everything working, there's not a lot of meat on the bone with too many things. And what I said this week that I'm patting myself on the back for, because it was like a weird call. I said, I actually think we might have some profit taking this week. I think NVIDIA might chill, big cap tech might chill. And then instead of we correct, what if, I know it sounds weird because, you know, we have all these hot numbers. What if they rotate more aggressively into biotech and small cap? And so far, that's exactly what's happened. But out of fairness, you give us a super hot PCE and that game's over. It was just a fun dream for a few days. So that's where I'm at.
Last week you were feeling not great about the market. That's what you told me. You said I don't feel good about this market. Specifically, I think it was the Qs, obviously. Are you still having that sentiment, or has that changed?
It's funny. So we had a 2-day pullback. Right as I said that, right? I don't know if you remember. It literally looked like I was smart for a couple of days, and then NVIDIA came out. We know. And that, but by the way, that was my theme. Like, NVIDIA is going to be great. So why does this sell-off happen after? Why not they sell them off before, which is what happened. Now I am the same, but it's more looking underneath the hood. Have the Qs gone a bit far? Has SPY gone a bit far? But is there meat on the bone in other places of the market? Should you not paint everything with the same broad stroke? And I would say you shouldn't paint everything. There is some value in small caps. There are small caps trading under 20 times earnings. There will be opportunity. Hell, someone bought NVIDIA today, right? I'm sure it was down 10 or 15. You just couldn't buy it at 800 and hope someone bought it from you at 820. But you know that NVIDIA has already bounced 20 points off its low. So my point is just, it's probably a time to be a little bit more price conscious. And I'm not saying defensive, like sell everything, but at least not buy higher and hope some sucker buys it from you even higher. So I am a little bit, I don't want to say bearish, I am a little bit risk off with big cap, more risk on with small cap, definitely trim down biotech quite a bit, including Immuno. I think this company is a $50, $60, $70 stock, but that's a year down the road or 6 months down the road. In the meantime, in the last 3 months, it's gone from 6 to 27. Would I suggest buying it now? Probably not. You could have bought it a week ago at 20. So it's a case-by-case basis. But I can tell you, it used to be I could be like, I like that idea, and this idea, and this idea, and this idea. And now it's like, I like that. And if this pulls back, I like it here. And if this index comes, so it is definitely taking a little bit more thought here. And then each day you can have some fun with some crazy stock that's up 1,000,000%, because that's the market we're in. You know, there was some crazy stock up today, JANX. By the way, shocker, another biotech was up 100% this morning. Could have bought it and made another 100%. It was up 200%. So there's a fun trading environment too that there's no reason you can't take advantage of.
All right, great. All right, so for everyone who with us still, this is where you can go, t3live.com/DP, to sign up for David's free webinar tomorrow. If you liked our conversation here, we'll be doing a lot more of this tomorrow and really getting focused down on David's focus for the month of March. So we didn't talk about March very much here. We recapped February. So if you want to hear about March tomorrow, this is where you go, t3live.com/DP. There will be a special opportunity where you can join David's room if you are qualified. We'll, of course, go over all of that in the webinar. But again, t3live.com/DP to join tomorrow's webinar at 4:30 p.m. Eastern time. So after the trading day is over. David, good luck with the rest of your trading day today. And
thank you. I got to wake up. I'm tired. All right. Have an awesome day. Thank you for having me. Bye-bye, guys. Thanks for joining.